Okay, hello everybody. Welcome to Korean Atlanta Mentorship. So we're just going to do another quick review of velocity banking before I actually get into what velocity banking is, I just want to highlight this video that I saw, which is about paying off $10,000 in 6 months. And look at how many people watched this: 395,000 views for paying off $10,000 in 6 months. And why is this significant? Because for most people, paying off $10,000 of credit card debt in 6 months is out of their norm. So if you ever make a video about how you pay off $167,000 of credit card debt in 3 years, they'll be like, get out of here. That's not even real, which is probably why videos like this won't get as clicked on as much as a video about paying off $10,000 of credit card in 6 months. So let's get to it. Again, just one of the same situations that I've been covering for many of previous videos, and believe it or not, I've been making the same video over and over again, just because the mastery of anything is just doing it over and over again, right? That's a Bruce Lee quote. And if you don't believe me, just type in Bruce Lee 10,000 kicks, right? And I keep talking about that because what happens is that a lot of people, they always want the next new thing. Okay, they always want the next new thing. And basically it says right here, I fear not the man who has practiced 10,000 kicks once, but I fear the man who has practiced one kick 10,000 times. And that's how we get good at anything. We just do it over and over again. And so what we're going to do today, we're going to learn how to pay off $167,000 of credit card debt, even though I've been doing that for the past 10 videos, but we got to just keep doing it over and over again, or else how are we going to get good, right? And some of you email me asking, oh, can I have the spreadsheet? But it's like, I'm doing it with you. Do it with me. Play the video along with Excel open. Write down these numbers, pause it, put these credit cards or make up your own numbers. And if you want to know where I got these credit card numbers, I went to bankrate.com, right? Bankrate.com, minimum CC payment calculator, minimum credit card payment calculator. You just put it in here, and then Bankrate will give you these numbers. So for example, if I have a $5,000 credit card at 30%, 5000 at 30, right? 30, then you see a $175 payment, and you can see it's $175. Again, don't be afraid to get into this, right? I think as a society, we're so passive, and people think that this velocity banking spreadsheet is some sort of super complicated thing, but it's really third grade math. I mean, A minus B, like income minus expenses is your cash flow, right? So don't be afraid to do it. I know a lot of times people think like you have to be given the answers, but a lot of this you could just really do it yourself, and you'll get a lot more out of it if you do it with me rather than expect me to hold your hand. And if I have to hold your hand and you're not paying me, I'm going to end up resenting you. And I don't know if you want me to end up resenting you, right? Okay, so income, expenses, and we have a penny of savings because we went crazy and we had 10 credit cards with $167,000 of credit card debt. Now, here's the thing I want to mention is that banks don't lend money to people who need it. So if $10,000 of credit card debt is the maximum that you're allowed to borrow, you probably don't make that much money. I'm gonna be honest with you, and people get really offended by this because, when we talk about getting lines of credit, they always say something like, oh, well, who has a line of credit like that laying around? And the answer is probably not you, because you probably are trying to get credit when you need it rather than getting credit when you don't need it. That's the most secret important things with banks, is that banks don't lend money to people who need it, right? This is how I have over $279,000 in lines of credit, and that number is probably going to be around maybe 450 to 500 thousand dollars in lines of credit in the next 3 to 6 months, depending how things go. Okay, because why? I'm always getting it when I don't need it. Okay, so two things to pay off all this debt. Number one is we need a budget, which we've done right here. Income, expenses, leftover savings. And the most important thing with the average American is that the average American uses their checking account to pay for things. When we're doing velocity banking, we're going to use our line of credit as our main operating account, a line of credit. Okay. And so, again, make sure that you list all of your debts because every debt that we pay off is essentially more cash flow, right? That's the whole point of velocity banking. If you don't have any debt, so let's say you have make $5,000 of income and you have exactly $5,000 of expenses with absolutely no debt, that's not velocity banking is not for that situation. That's more of a budgeting problem. Velocity banking is helping you pay off your debts using a line of credit as your main operating account. Okay. And we assume two things. We assume that we have the exact same income. And then, unlike mainstream personal finance, which tells you to save some money, we're never going to save money as we're paying off debt. Right. And so let's go here and we're going to go ahead and copy all of our expenses. And unlike the average American, where we were okay, so we're not going to have any savings, but we are going to have a number that's similar in the very beginning called cash flow, right? Which is income minus expenses. And so you might look at this like, what's the difference? They look exactly the same. Once we use our line of credit as our main operating account, this is going to be a completely different number. And we're going to try to maximize this number as quickly as possible. Okay. So what we're going to assume is we have a $175,000 home equity line of credit, right? Home equity line of credit. So this person is a homeowner. $300,000, we'll just assume maybe they bought at the right time and they got at least $175,000 in a home equity line of credit. Think of it as a credit card based on the value of your home. You might be thinking, oh my goodness, who has that kind of home equity line of credit laying around? They don't, because again, people always try to get credit when they don't need it. And if you do get a home equity line of credit, you're probably going to use it wrong, because there's tons of Reddit posts out there where it's like, I have a home equity line of credit and I'm struggling with debt. And the reason why you're struggling is because you're doing things the average American way, where you're using your home equity line of credit not as your main operating account. Whereas with Velocity Banking, our line of credit is our main operating account. Okay, that's the only difference. And what is a line of credit? All it is a financial tool where you can borrow money, pay it back, and use it over and over again. So if you have a credit card, that's a line of credit, but a home equity line of credit is even better in some ways, because let's say I borrow $1,000 from this home equity line of credit, and then I never pay it back. Like, I don't have any money to pay the minimum payment of, let's say, $25 to $30. Okay, I'll borrow that $25 from the home equity line of credit, put in my checking account, immediately pay it back, and they'll, like, you'll get some interest. So maybe like the interest like $5, I don't know, but it'll be like $1,005. Now your balance has increased. But that's the crazy thing. You can literally just borrow from it, pay it back the same moment, and then your minimum payment satisfied, and the bank doesn't even care, because they know that most people won't use the tool correctly, so that's why they don't care, right? So, all right. So now what we're going to do is we're going to maximize this cash flow number, and the easiest way to maximize this cash flow number is to dump as much of this credit card debt into that line of credit as possible. That's like the first step. Okay. Now we have $167,000 of credit card debt. If you just add this up, and if you don't believe me, just pause the video, but I don't want to be here all night. So let's go ahead and assume this is $167,000 of credit card debt, right? And then we just move it towards that home equity line of credit, 167,000 and month 0. Okay. Now, what happens by simply transferring this debt to the home equity line of credit? Oh my goodness, because we essentially have made the credit card balances to 0, right? Because all we did is debt transfer. We didn't pay it off yet, because all that debt is transferred to home equity line of credit. At least on this side, this is going to go to 0, 0, 0, 0, 0, 0, 0, 0, 0, 0, right? And we turned a penny into $5,345 without doing anything, right? And so the actual strategy itself is you put your entire paycheck into that line of credit, and then you take your expenses out, and then after every single month, the balance is going to go down about $5,000. $5,000 plus some change with some interest, right? Because you do have to pay interest on the line of credit. But again, If I put $9,000 into that line of credit, it's going to do two things. Number one, it's going to satisfy the minimum monthly payment, so that minimum monthly payment is not really of our concern anymore. And then number two is it's going to minimize the interest, because the interest is calculated by that average daily balance. So when you dump your entire paycheck, the balance is going to be at its lowest, so therefore you're going to pay less interest, right? And then as you're taking out the expenses, which at the max should be around 4,200 or 300 based on your budget, your cash flow is going to pull down the balance plus some change on the interest. And again, to calculate this is really easy. You got to calculate month one, which is I2 plus 1, right? Very simple formula. And then what we're going to do is take the next month's balance, which is the previous month's balance, plus the previous month's interest, minus this cash flow number, $5,345.84. Okay? And then what we do is we calculate the interest. We take the average daily balance, so we just estimate it using this average function right here, multiply by the interest rate, which is 0.1, 10%, and then you divide by 12. Okay? And now I just copy and paste. And then now I just gotta, you see how it goes down, right? It goes down by 5,000 plus the previous month's interest, right? So this is going to go down by 5,000 plus you add the interest accrued for the statement of month one, right? This goes down by 5,000 plus the interest accrued here, and then you rinse and repeat over and over again and over again, and then now you're at month 37. And so again, 37, and if you do 37 divided by 12, right? 37 divided by 12, you'll see that it's 3.8 years. 3.8 years. So in 3 years, right? So we'll say 3.08 years, we paid off $167K of credit card debt. Yep, we sure did. And so now we just kind of do that. And that was pretty easy, right? And so again, how long did it take us to pay off 10K of debt? 2 months. And so a lot faster than 6 months. Again, people, because $10,000 is a lot to them. And again, it's all based on your income, right? Because, if you are only lent $10,000, then, you don't really make that much income, because banks will only lend to the maximum amount they think you can handle the money, right? And so if we have $167,000 of credit card debt, which is actually like the value of a house in some states, right? And it's only going to take us, let's say, 3 months to pay it off, or not 3 months, 3 years, right? About 3 years with a 10% interest rate. So people freak out about, oh my goodness, 10% interest on a mortgage. But the way that interest is calculated on mortgage and line of credit is almost the same. You don't have to fear that 10%, just as long as the balance of that debt is not too high. So if $167,000 of 10% is not that high compared to, let's say, $1 million at 10%. And so some people get this false idea that you can replace any mortgage line of credit, which is not true. There's more factors that you have to consider into that. But hey, if we have this $5,000 cash flow, and we're just paying down the debt, this $167,000 of credit card debt, no problem, right? About 3 years. And I'm assuming, because again, this is out of most people's reality, no one's ever going to click a video that says I paid off $167,000 of debt in 3 years. But because, even paying off $10,000 in 6 months is like a lot to them, they're more likely to click that. But you multiply it by whatever I just said, they're almost unlikely to click that because it's too much out of their reality. Okay. All right. So just another quick review. I'll probably change it up next time, make different numbers. But I love going from a penny to $5,345 in one instant without doing anything. And if you want to know my personal situation, I practice and preach this because hey, if you take a look at what it is that I do, and ignore this baby steps for now, all velocity banking is just having zero savings, right? You see the zero savings right here. So personal mainstream finance would tell you, oh, save up some money, pay some debt. Whereas here we're saying never save money, and your line of credit is essentially your new savings account. So every time I make money, beginning balance is zero, ending balance is zero. So I'm never going to have any savings until all of my debt is essentially paid off, right? That's essentially what velocity banking is. You're going to deconstruct it. It's basically no savings with the help of a line of credit. Okay? All right. So just another quick review for today. This is velocity banking. This is how we paid off $167,000 of credit card debt in about 3 years, and it was so easy that I could just do this from the back of my what do you call it? Back of my hand. I don't know. So, all right. Well, have a great night, everybody, and maybe who knows, we'll make some secret society. Somebody accused me of actually like creating a velocity banking cult. I don't know if they were joking or not, but maybe I got to start that and I'll be like the cult leader. I'm just joking, or maybe I'm not. If it's going to make me a lot of money, maybe I got to start that cult. All right. Well, have a great night, everybody, and we'll speak next time.